All right, so ladies and gentlemen, so tonight is BYOB Market Talks. We're talking about the basics. Once again, ladies and gentlemen, my name is Tasha. I'm the Trade Whisperer. I am the creator of the BYOB Cash Out Strategy. And tonight we are here for BYOB Market Talks, followed by a talk with the finance doctor. So for each and every last one of you all on the line, for each and every last one of you all this evening, just want to officially welcome you all. Now, if you have not had the opportunity to do so, continue to drop it in the chat where you're calling in from, as well as your affirmations. All right, ladies and gentlemen. So, all right. So, just welcome, welcome, welcome. All right. So, what are our affirmations? Good evening, Tyler, New York. There we go. London. Good evening. Good evening. So, BYOB Worldwide is what we have. Now, what are our affirmations? All right. Our affirmations are simply your mindset. Okay. Your mindset is critical, mindset is key. And I want you to think about something. If you believe you can, you can. If you believe you can't, you can't. And that is just critical, all right? That is just key. That's just key for you to understand that you are in control and you are just really in control of your destiny. And so, what we're going to do tonight is I'm going to share my screen, but as I do so, we're going to walk through the BYOB cash out strategy. I want to make sure that you all completely understand and we'll operate from that standpoint. And then I also have something that I want to share with you all this evening. And I believe I'm going to do that first because I want to make sure that I can get all your questions and comments answered. Okay. I want to get each and every last one of them answered. And so, mindset, though, let's talk mindset first. I am a BYOB master trader. I am a BYOB master trader. Why is that important? Why is it important for you to be a BYOB master trader? Why is that important for you to walk around with that mindset and understanding? Well, it's really quite simple. If I believe I can, I can. If I believe I can, I can. And so that's the mindset that you want to operate from. That's the mindset that you always want, no matter what it is that you desire. Good evening, Chicago. Good evening, Cleveland, Jacksonville. No matter what it is that you desire, no matter what it is that you're looking to have, that mindset that you look for, that mindset you must have. And that is so important. All right. And so you always want to begin there. And then also, what we do on these calls is we walk you through. I am not a big fan of let's jump on a call and let's just take 20 trades or let's take 10 trades just for the sake of taking trades. We do everything in excellence. And so everything in excellence simply means that we're going to analyze the market. We are going to operate from there. We're going to analyze and we're going to help you become an effective master trader because you can take 10 trades and it'll make you feel really, really good, but if you didn't analyze it, you don't understand, ask yourself, what is that end result? What is that end result? Am I really doing something to shift the dynamics of my life? Or am I a professional or am I an amateur? And that's the difference because you want to be a professional trader. An educated trader is a profitable trader. You want to be a professional trader. That's where you want to live and that's where you want to be. We are not amateurs, okay? That's why you are a BYOB master trader. Amateurs do things for fun. That's like playing putt-putt golf, okay? So amateurs just do things for fun. Professional golfers are professionals. They take their time, they dive in, they're diligent, okay? And that's who we are. And that's why that's our affirmation. And that's why we do the calls the way that we do them. And then I am the signal, I am the signal. So I am the signal means that we're not looking for signals. Yes, we can use these tools. We do have tools. I have swipe trades. We have swipe coins, so many tools out there, but you need to know why you take a trade. You need to be able to come back and analyze it and understand why you take the trade. All my trades end in profit. I must have an expectancy. When I take a trade, when I analyze the market, I must have an expectancy. On our radio show today, we talked about the lottery. This is not the lottery. This is not by chance. This is not a happenstance, okay? That is not what this is. So we want to make sure that we are operating in excellence. And we want to make sure that we know you need to have full faith and confidence and understanding that when I take a trade, my trade is in profit. And that's where we want to be. And I am 777. Well, seven completion is profit, it's the withdrawal from the market. And so we just want to make sure that we're operating, in that excellence always. So that should really help you understand who we are, what we are, why we affirm as we get started. So yes, this is BYOB Market Talks. This is basics, back to the basics. And this is part of the basics. So before I pull up a chart, before I look at anything, before I do anything, I need to be in the right mindset. So does that mean you need to clear your mind, meditate, devotion, whatever you need to do, you need to make sure that you do that. And so for those of you all who are joining us, if this is your first time here this evening, your first time on the line, let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. All right, so welcome and welcome back, ladies and gentlemen. Welcome and welcome back. So Jonesboro, good evening. I see a few of you all have joined. Cleveland, I see BYOB Worldwide. I got Chicago, Fort Washington, Cleveland again, Jacksonville. So yes, a few of you all have joined. So welcome, 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 and welcome back. So now let's go ahead and I'm gonna pull something up because over the last couple of weeks, there has been quite a few events that have transpired. And these events that have transpired has had people looking like, oh, shiny thing. Oh, let me go over here. Let me do this. Let me do that. And there's really no shortcut to education. And that's why I started this call out saying an educated trader is a profitable trader. There are things you want to understand in the market, right? There are things that you want to understand how it operates. There are things that you want to understand what's actually happening and what's actually transpiring in the market. And that's that perspective. And that's where you always want to be. And so I'm going to pull up a few. First, I'm going to pull up the market psychology. And so, thinking about this and understanding the market psychology, this is why part of why education is so important. Okay, guys? This is why education is so important because what we saw transpire and what we still see is that a lot of people believe that Facebook is their financial advisor or, that social media, let me just say social media is their financial advisor. And so, what that ultimately means is that you are looking at social media, you are looking at that to actually, give you advice from someone who has no background or no knowledge of how the markets work. It's just that, oh, everybody's running over here, let me go. Everybody's running over there, let me go over there. And ultimately, this is what happens. This is what the market does. This is why the market looks like it looks from time to time, all right? And so what does this mean? And I want you to pay attention to this. So you have disbelief, okay? This disbelief happens, and then we have hope, okay? And the market runs in this cycle. It just runs in a cycle. So whether you're looking on a monthly, the monthly chart, whether you're looking on a daily chart, the hourly, the market runs in a cycle. And so optimism, is this real? Is this rally? Is this going to happen? Okay. And then you come here and you look at belief. Okay. So here's your belief. Then of course we have thrill. So belief is like, great, I'm in, I'm vested. And so you think about it, I have to tell everybody, this is Facebook. Thrill is Facebook. Thrill is social media. Thrill is what happened with AMC. Thrill is what's happening with Dogecoin. Thrill is what's happening with GameStop. That's thrill. I have to buy more. I have to tell everyone to buy. Everybody needs to buy this. Okay. And what's going to happen? So everybody jumps in, everybody gets in because you were here, somebody saw it, somebody was in it. And then, of course, now it's time to get fully invested. And then we get to this euphoria. We're going to be rich. I'm telling you right now, you need to buy this. You need to do this. We're all going to be rich, right? Everybody's going to be rich. All of your Facebook friends are going to be rich because they found the next best thing. And then you come over here, you get complacent. We're putting more money into it. We believe it's going to manifest because we do not have an educational foundation and an educational base. And so what happens is anxiety because now it's dropping. What's going on? People are buying it. I just don't understand. Oh, they're out to get us, right? So my investments, wait, it's going to come back, right? GameStop's been around forever. It's a great company. So is AMC. And so I'm using real life examples if you haven't noticed here today. So these are really, really great companies. They're going to come back. Wait, I need to get out. So now let's just think about what our social media, what our timeline look like. So wait, I have to get out. I have to get out. You pull your money out. I cannot afford to lose more money. And then of course now it's the government's happen, right? It's the hedge fund investors happen. It's their fault. It's everybody's fault but mine because I refuse to get education. It's everybody's fault but mine because I don't understand how the market works. So it's everybody else's fault. So it's, it's GameStop fault. It's Robinhood's fault. It's the hedge funds investor fault. It's everybody's fault but mine. It's the government's fault, okay? Because I didn't take the time to properly educate myself. So now when you come here, you get depression because you lost some money, okay? And then of course you go back to belief and it circles back around, right? It circles back around and that's what it does. So let's look at this in real life and then we're going to get that back to the education. Let's look at it. And of course, as I go through this, if you have any questions, comments, testimonies, drop it in the chat, drop it in the chat. And I promise I'm going to answer it. Now, I want you to come over here and I want you to look. Now, doesn't this look familiar? This is AMC, okay? Look at the chart that we just had up. Look at the chart that just happened. This is AMC. So right here, that disbelief, it was literally $1, $2. That's what the stock was. And then all of a sudden it shot up. And now doesn't this look just like the chart? Even that little dip in the middle, okay? Before we got to, even that little dip that happened right there in the middle before we got to the complacency, okay? People were okay with that little dip. Come on, where's my thing? Hold on, my Zoom. Okay, here we go. All right, so people were okay with this. People were okay with this little dip. And so now, it's everybody's fault. But doesn't this look like the chart that I just had up? Doesn't this just look like the same chart, the market psychology chart that I was just looking at? And then I come over here, that's GMC. We got AMC, we got GameStop, GME, not C, GME. So we have AMC and we have GME for GameStop. Even a little dip in the middle looks just like the chart I just showed you on both of them. And this one went from, look at how low this was. We're talking about less than $20 a share to where it shot up, right? Remember, Facebook is your financial advisor, and it shot up, and then even a little dip in the middle, we got complacent, and then it dropped off. So, and I can look at, let's just look at one more, right? Let's just look at one more. And it's not a stock, but hold on. All right, so now look at this. Where is this one at? What is this looking like? So let me cut off my pivots. So what does this look like? Doesn't it look like we're formulating that same type of pattern? Doesn't it look like we're formulating that same type of pattern that we're looking at over here? So same thing. Now it is a cryptocurrency and we have other things moving cryptocurrency. But from the appearance of things, so I'm not going to guarantee, but from the appearance of things, because this is a cryptocurrency, and when Elon Musk, just bought $1.5 billion worth of Bitcoin, but what happened is everybody went from here to here to here, right? So now this looks like it's doing the same thing. It's just on a different cycle, different pattern. So this is why your education is so important. This is why we take the time and we're very deliberate about ensuring that you are financially educated. This is why we don't throw trades out there. This is why. These are things you need to understand. This is so, so, so important if you really want to make that shift. This is so important if you really want to make that shift in your legacy and your family. So before I dive into the strategy or before I dive, does anybody have any questions, comments, or testimonies? Drop it in the chat. Because I just want you guys to see as we start this call this evening, why our education is so important. Why everything, how you do one thing is how you do everything. And if you shortchange or shortcut your education, then you're going to shortchange and shortcut your success. So there is no shortcuts to success. You have to take the stairs. You have to educate yourself. You have to operate in that foundation. And that's just really important because the market is going to be the market. The market is going to repeat itself. What you want is a relationship with the market. That is ultimately what you need and what you want and what you must have. And so I just want to make sure that we all operate, we have that understanding. Okay, I see you unmuted, Mr. Rogers.
Yeah, I wanted to make sure everyone really understand what Ms. Dyer just shared with you this evening. And this is so critical, particularly now that, as she made mention, on your social media, you're hearing so many people are talking about, hey, you need to get into this. And folks, on our watch, we want to make sure that when you make a decision, you understand the impetus behind it. And this information is so critical because this is going to make you become even more profitable and understand once again how to detach your emotions. But when you understand the pattern, you understand the different types of analysis in the market. What does this do for you? This helps you understand that you no longer have to predict or think or believe how good a company is because the market is going to produce the outcomes because the market insists of people and their emotions. And when you understand the patterns and the behaviors, because the most predictable thing on the planet is human behavior. And when you understand that, you're now in a position to be poised, to be profitable, to be impacted, and understand. We will continually make the commitment to put the tools in your hands. So if we're absent, if we decide that we're never going to do another market talks, you are not hindered, you're not crippled, but you are empowered. And so if you're excited about this and even information that Ms. Dyer is sharing with you, even with this level of understanding, as she just showed you, I need you to drop a 555 in the chat to make sure that you're capturing the essence of the importance of understanding the flow of market. And remember, ladies and gentlemen, we are here because we believe first of all God has led us to lead in this capacity in this manner, and it's really about you because, and I can speak unequivocally and confidently on behalf of Ms. Dyer and Dr. Bythewood. We don't have to share this information. We don't have, and we choose to do this because we are serious about impacting and empowering people. So if it's anything that you should take away from this conversation this evening, it's knowing that we really care about your family, your success, because there's nothing selfish about any of us. Because if that was the case, we would not do what we do in the manner in which how we do it. So once again, Ms. Dyer, I salute you for sharing this information this evening, and I thank each and every one of you. And hey, let's become empowered and share this information with fervor and understand that your success is our success, and we do everything in excellence. Back to you, Ms. Diane.
Awesome, awesome. I mean, seriously, 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 seriously. Thank you so much for adding that. Thank you so much for adding what you just dropped and what you just added, Mr. Rogers. And if I'm looking, it says, I'm new to this, but I got to say, this is great info. Yes, and everything in life is a cycle or a pattern. Interesting that you speak about that. Understanding them allows you to go ahead and break those patterns. Absolutely. And change those cycles. And I don't know if you were actually on our radio broadcast this evening, but that is exactly what we talked about. And so that's really just showing is, and I'm gonna use Dr. Byford's words, is the power of the collective consciousness. Definitely, want to utilize, definitely highlight that. And so you guys, I mean, we're just here to educate, impact, and empower. That's what we're here for. And so what I'm gonna do is let's go ahead and let's get down to the basics. But in order to understand the basics, there were some things that we needed to discuss. And that was part of what we needed to discuss. And so what I'm going to do is I'm going to start here on GBP JPY, and I'm going to start here. But wait, before I do, for those of you all on our morning calls, I'm going to come back here. But you see this trade that we didn't take? This is why what I'm sharing with you and understanding the market and understanding what we're going to talk about on Thursday. You notice how this still has not manifested and this trade has still not, and it did exactly what I said it was going to do, but you see it's still sitting there. It just hasn't pulled up yet. And this is why this information is so important, and we're going to educate you on that process. So now, as I go through this, because tonight is basics, okay? Tonight is basics. Tonight is basics. So, tonight is basics. That means if you have a question, drop it in the chat, okay? Drop it in the chat. and we want to walk through it and make sure that all of you understand it. And so I was actually trying to see if we can get a really good trade, because all of them are not, we've had some consolidation in the market, but all of them are not going to be, I don't like trading coming out of consolidation. All of them are not going to be picture perfect, but for training purposes, oh, you did look at it. For training purposes, I do want to find one that definitely kind of works, walks through the strategy. Yeah, we had some consolidation today. And so I really kind of want to leave that alone. So let me see, let me see here. My normal GBPs did not do right by me. This one normally does. See, told you. This one normally does. AUDJPY. Nice and smooth. All right. Oh, you say AUDUSD as well? I can check that one. This one has a little bit. AUDs are normally smooth. So yeah, they are normally smooth. I'll check this one. We'll walk through this. So, because this came out of consolidation too. This is what consolidation looks like right here, guys. So now let's talk about this. So let's look at it. So the BYOB cash out strategy. Now we start on the 15-minute chart. That's where we start. We start on a 15-minute chart. And understanding that we start on a 15-minute chart, what that means is that is where you as a beginner, you as someone, you as a beginner, you as someone who is beginning to understand, or you as someone who, is beginning to dive into the markets, right? Someone who is definitely beginning that process. This is where you as someone can get in, grab 10 pips and get out. But even if you decide to remain a 10 pip trader for your entire trading life, you master trader 10 pips, even if that's where you want to live, you still need to understand the market. So I want you to understand that I can dive in. So I can dive in and I can definitely begin to take my trades. And also, I can take them, but I also want to advance my skill set. And so that right there in itself is really important. So when buying, let me walk through the strategy first. Let me stay here. And then those type of questions I will come back, but I want to stay on the strategy right now. And so when we begin the BYOB cash out, okay, the BYOB cash out is 3 simple indicators. All right. 3 simple indicators. Okay. 3 simple indicators. And so it's the stochastic, it's the Hikanashi candle, and it's a PSAR. This is momentum. This is a trend candle. And this dot is the PSAR, which is a parabolic stop and reversal. Okay. Now, when I'm looking for a buy or a sell, I want you to look over to the right. These numbers, okay, these numbers run from 0 to 100. 0 to 100. Over here, you have a 20 and you have an 80. So this is the range that is typically going to stay in. So you notice that it's going to, when it comes down, it goes up. When it goes up, it comes down. When it goes down, it goes up. It doesn't always reach the top. Things happen in the market like this consolidation. Each time frame has a different one, right? Each time frame definitely has the stochastic will be in a different place on each time frame. We've trained on that, but that's not for tonight, okay? And if we have time, of course, I can come back and show you that. But so what I'm looking for, all right, is when it's up here around the 80, I'm looking for a sell. When it's down here around this 20, I'm looking for a buy. Now, when I say around the 80 and when I say around the 20, I need that crossover and cross down, or that crossover and cross up, okay? I need that crossover and cross up, because you can look at a currency pair. I can look at a currency pair and and when I look at it, this still be like headed downward. Remember, the 20 to the 80 is our range. So the numbers have to be around and about, but it can go to 100 and it can go to 0. So Just because it's at the 20 does not mean it's automatically going up, okay? That does not mean it's automatically going up. Now, here, okay, here. What I'm looking for, I have my blue line cross over the red and a downward momentum, okay? Blue line going over the red and a downward momentum. So buy low, sell high. No, 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 no. So not, well, kind of, no. So in a sense, but you, in a sense, in a sense, in a sense. So it's just that stock mentality. You want to get away because you're not selling when it's up here. You're selling the market, but it's still like you're buying it, if that makes sense. So technically you're correct, but just for simplicity, but I mean technically you are correct, but for simplicity, when it's up here, I'm looking for a sell. When it's down here, I'm looking for a buy. And so when you actually place those trades, you, even though you are selling the market, and then when you take profit, it's buying. So in vice versa, if I'm buying the market, I'm purchasing and then I'm selling when I take profit. So that's the technical behind, that's the why behind what you're doing. So technically you're right. Now, when I look at this, okay, that blue line cross over the red and that downward momentum. So I said around. I said around the 80 and around the 20. So as I'm going through this, and this happens all the time, because I'm gonna pause for a second and say this. I said around. So listen carefully to how I explain it and what I say. So so listen carefully to how I say it and what I say, because we have a tendency, and it's just human nature, to add things to it. Okay. We have a tendency to add things to it, because here it's not a below a, but it's around the 20, around the 80. And so that around is very important, because it can be here, it could be at 75. That doesn't mean I don't take the trade if everything else aligns. It can be at 25. And so you'll not get it, or you expect it to have to be above the 80, or so many different things. So I want you guys to pay close attention. Don't try to memorize. Remember, this is an art and not a science, okay? It's an art, not a science, because every single trade will never be the same. All right. Everyone will never be the same. And that's not just for you. I can't tell you how much I get that question, or I get things added to. And it's like, well, what about this? And what about that? And it's just like, well, what did I say? So it's you want to always make sure that we stay within the understanding and not add to, right? Not add to. So we definitely want to stay there. So now, when I'm here, now what I'm looking for, so we understand our stochastic. The stochastic is the leading indicator. My stochastic is my leading indicator. So even though human nature, I look at the charts first, right? Even though human nature, I look at the charts, I need you to adjust your eyes to see what is my stochastic doing, because my stochastic is my leading indicator. My candles, my PSAR, that is a lagging indicator. So the stochastic is like it predicts movement. My lagging indicators mean that something has manifested in order for me to be able to know that if something's manifested, in order for that to begin moving. Now, when I know the blue line crosses over the red, I have a red candle with a flat top. That's what I'm looking for. I have a red candle with a flat top. And then I have my PSAR, okay? I need all three of these to line up. All right, all three of these need to line up. Blue line cross over the red and the downward momentum. Red candle with a flat top, PSAR flip to the top. That's when I'm looking for a sell. So you notice that it started here, but I had to wait 15 minutes in order for that to happen, in order for that to manifest. Now, I see the questions, I'm gonna get to them. Now, so right here, understand that that's not it. I need to do my time frame confluence, okay? I need to do my time frame confluence. Time frame confluence is important. Strategy, back tested, 92% accuracy rate, over a year, every currency pair. However, you don't know what the market, all of us, you don't know what your pip reaction time is. Pip reaction time, how long does it take you to get into the market? You don't know where you are in the market. Are you trading, like just looking at this right here? Am I in a correction? Am I in, like, what am I in? Am I with the trend? Am I in a range? You have no idea. We're on a lower time frame. So the higher time frames tell me what the market is doing. My lower time frames tell me where I am and all the activity. Okay. Not where I am, all my activity. Higher time frames tell me where I am, what's happening. Lower time frames tell me all the activity where you can actually see all of the movement. And I'll show you that on that other trade in a minute. But so what I want to do is I want to check my hour. When I check my hour, it needs to be going into a sell. Okay. It needs to be looking into a sell. So not that everything is aligned, because I'm not trading on the hour. So I don't need a flat top, PSR flip. I don't need those things, but I do need something to tell me that I'm going into a sell. So my stochastic has already been curving. So yes, and I need something red. I don't like this candle. This is me. I don't like this candle. It's also not red. Now, granted, because of the type of candle that it is, this might have fluctuated between red and green and red during the duration of this hour. That's highly probable. All we're looking at right now is a simple fact that this closed, right? This is where it opened, that's where it closed. That this candle literally closed higher than where it opened. But it's like a doji, right? It's a doji hikanashi. So it's really nothing there. You know, I don't like those candles, like when they do like this. Now, let me drop down to the 5 minute. When I drop down to the 5 minute, it needs to still be selling. Why does this one? Remember, it happens, it's three of these in one 15-minute candle. So this is if there's a change happening, if something else is going on, you're going to see it here. Okay. So this is where you get your 10 pips and cash out or trade to your support and resistance line. Also, my stop loss goes above the PSAR, not on the PSAR. Now, technically, this one did go. Now, would I have taken this trade? I just told you I would not have. And so let's talk about it. Even if so, we would have got 7 pips going to my support resistance line right here. Technically, would you have still gotten your 10 pips? It covered 13. So technically, right? Technically, what's your pip reaction time? Are you aware that some of you all have a 12 pip reaction time? Some of you all have a 6 pip reaction time. So technically, you still haven't gotten your 10 pips. So technically, it covered it, but you literally have not gotten your 10 pips. You just have not gotten them. And so this is where we want to understand. And so when I look at my trade plan, when I look at how I trade, you know, even when we're on the call, some of you all be like 777, 777, right? You took the trade, you got 2 or 3 pips, you didn't get 10, you got a few pips, 5, 6, 7, 8, but you didn't get 10. And then some of you all are like, how? How did they do that? And this is where that consistency and discipline sits in. This is why, you know, this is why I picked this one over the one that was over here, because this is where your consistency and discipline is going to set in. You need to be able to understand that, because I don't like these, right? I don't like these. So obviously it's getting rejected. We see it's getting rejected. But what you just traded down was up in here. And you see this really hasn't moved. It started pulling back up. So you'll be caught in a correction right now. You'll be caught in that. And so it's just so important to understand how you want to be able to take those trades and why you want to be able to take them. So let me answer a few of these questions, and then of course we'll go look at some more and how they impact the market, because all of that's important. And no, you're not confused, you just need clarity. And that's the importance of the education. That's the importance of the educational. And I say that because it's not difficult, it's just different, but confused is an energy. Okay, confusion is an energy. And so when it's like I said, it's not difficult, it's just different. And so we have been taught, right? My background, when I retired, I became a financial advisor. So even my background and what I studied for and what I've been taught, you've been taught by somebody like myself that we need to buy, pray, and hold. And the reason why we're praying is because we need it to rise in value. And that's the only time I take profit. And when you get to a certain point, that's when I sell it, right? Buy low, sell high. You know, that's when I sell it. And when I sell it is when I actually can cash out and take my money. Well, the difference in what I was saying, I was like, technically you're correct. However, You know, in this market, when you really think about it, you're profiting on the movement. You're not physically buying the currency. You don't physically buy anything. All we do is analyze the movement, profit on the movement, and that's when we take our trades, right? That's what we do. And so that's the difference. And that's what I was trying to explain. So the word, so just clarity. And hello, Baton Rouge. Okay, so did I have any? I think I answered that. And I did answer that one about the 20 and the 80. All right, so questions, comments, testimonies, and we'll go look at another one. Questions, comments, testimonies. You talking about right here? Blue line crossover to red in an upward momentum. Green candle at a flat bottom. PSAR flipped at the bottom. Go to my hour. Look what we have again. This is a good example because this is what some of you all will do. You'll look at this, it's like, oh, I have a trade, I have a trade, I have a trade. No, we don't. Let's look at this one, okay? Now, is that setting up for a seller consolidation? I'm not going to say what it's doing right now, but let's analyze it. So my stochastic is curving down. I do not have confluence. Yes, this is another one of those candles I just discussed that I don't like. My stochastic is pointed down. So first things first, I do not have confluence on my stochastic and my oscillator, my stochastic and my price. My oscillator and my price do not have confluence. So because of that, I would not consider taking that trade. This is in a downward momentum. I'm looking for a buy, okay? So no, the gap is good. The bigger the gap, the stronger, right? The gap is good. You want the gap. That's momentum. It's a momentum indicator. One is a stochastic slow, one is a stochastic fast. So there is going to form a gap. You notice that when it closed, look at the consolidation and things that begin to happen. So now, when I come to my higher time frame, let's analyze where we are in the market, and you can understand why it's rejecting. So you notice that, look at all of January, okay? It's peaked up, but let's go ahead and drop this support and resistance line on here, okay? Let's put that support and resistance line on there. All right, so now as I come over here, when is the last time this market has really been this high? Let me put this on the daily. When is the last time this market has been this high? So that's where we are now. This is 2018. This is 2017. This is 2017. It was getting rejected all before then. So it's very important to know where you are in the market. So the likeliness of me taking a trade for a buy is absolutely not. You know, so this is what I meant in the beginning when I said it's so important for you to understand, yes, get my 10 pips and cash out. That's the foundation. You can start taking trades in your first 14 to 21 days, you know, start getting that confidence in the market, but don't stay there. Don't stop, because things like this is important. Yes, you can have that accuracy rate, but we want to help you increase it. Okay. We want you to actually be that master trader. And so this is where you start beginning to understand where you are in the market. So now when you see consolidation right here, well, we have put that yellow line at the very top, or doesn't, no, this is a support and resistance line. So this support and resistance is your lifeline. And so when you see it up here and you see this being rejected right up in here, okay, when you see this happening and you see this being rejected, then you understand why. So absolutely no way I'm taking a buy. Now, when you think about support and resistance lines, when you think about that, think about the fact that, you know, let me show you how, you know, when you first start learning them, you want to put on the line chart. You see right there where it touched it. Let me go back up to my daily because it was so far away. You notice we had a rejection there. Kind of think about a support and resistance like a stop sign, okay? Think about it like a stop sign. Whenever you hit the stop sign, no matter what direction you're coming from, remember, you know, there's a stop sign on both sides of the street, all right? Not just for your direction. So it's one coming for a buy and one coming the other way for a sell. You're going north, you're going south, you're going east, you're going west, regardless of which direction. If it's one on this side, it's going to be one on that side, okay? So think about it like that. It's a stop sign. And so when you pulling out of your neighborhood and you get to the stop sign, if you were to mark your tires, okay, If you were to put a mark on your tires, exactly where you stop, are you always stopping in the same spot? So I'm not really concerned with the fact that it passes it up sometimes. There's no way to have a definitive line in the market. Yes, we do support and resistance lines, but these are really technically zones. And so just like we saw on the trade this morning that we were analyzing, you know, technically this is why. And so that, you know, think about it, you know, this right here, when you're looking at this and you can understand that, you know, you have this right up in here, people will miss their take profits because they're like, oh, it didn't touch this, or oh, I can't take the trade because it didn't come back and touch this. You know, we don't want to operate from that standpoint. You know, we don't want to operate from that thought process or that mindset. All right, you don't. And then the other question, how do you know when it's a correction? Go back and watch last Thursday's training. I went in a lot of detail on that. Pretty much the whole training was on impulse correction continuation, like that Elliott wave on that trend. So the whole hour was on that. So go back and watch last Thursday's, and that's really going to help you understand that. And of course, on coming Thursday on tools training, we're really going to get deeper into that because we've been training on how effective this is and when these triggers happen, so from that perspective. So now, so as I'm looking at this, okay, and I'm looking here, this is obviously being rejected, and so I'm not going to take a buy on that. So that was something good to analyze. Now, can it go up? Absolutely it can. I'm not concerned about it though. So last Thursday's training, it is on our YouTube channel. Let me drop this really quick. youtube.com, and it's BYOB challenge. There you go. BYOB challenge. There you have it. You are welcome. You're welcome. So now let me come back here. So this is what consolidation looks like. And so there were a few things that we discussed this morning. And now if you have questions to the strategy, because tonight is basics, I will keep reiterating that. Drop it in the chat. I want you to understand it. So this is where patience, profit comes in, guys. Patience, profit. You notice today that we had a lot of this, all right? Of course, GBP pulled out of there, but you notice that we had a lot of this. And so some days, this is what happens. This is what the market looks like. Other days, no, it's not what it looks like. Other days, we just make a lot of money. Either one, you make money, but you take a withdrawal from the market. But the reality is I need to know, I want to know, when to take a trade. So why am I showing you this tonight? Because you definitely, right? Or why am I showing you this tonight? Because when I'm doing this, many of you all will look at this and you will definitely begin to begin to jump in. You will begin to want to take trades and not understanding where you are. So like for my personal trading plan, I don't touch this. My super scalpers, let me show you what you all are doing. But I'm showing you this because I want you to understand the consistency. So in here, right? I could have easily got 10 pips out of this. In here, I could have easily got 10 pips, right? You can easily get some money in here. However, is there consistency in it? Is there consistency in it? What our goal is not for you to take 3 trades and then hit your stop loss on 3, because that's not going to balance out, right? That's not what we want. We want you to take 3 trades and profit, know why you took those 3 trades and profit, then take 3 more trades and profit, right? Then take 3 more trades and profit. That's what we want you to do. So is it worth it to trade in here? Is it worth it to really dive in and get into this consolidation? So understanding the emphasis for tonight is understanding where you are in the market. Just like when we looked at over here, understanding what the market does, understanding the psychology of the market. You are building a relationship with the market, okay? You want a relationship with the market. When you have a relationship with someone, you understand what triggers them, you understand how it moves, you understand, if I do this, then they're going to do that, they'll react this way, you know how to push their buttons, You know, Valentine's Day is coming up. You know how to make them feel good. All of those sorts of things, right? So when you want that relationship. So when you have that relationship, you really get a feel, even though you might not know, okay, this is what it is, or that's what it is, the name of something, you impulse correction, continuation, oh, Ellie wave, oh, this, oh, that. Regardless if you know what the name is, you understand how it moves. Okay. You can call it what you want to call it, but you understand how it moves. And so that's what's important. When I do my support and resistance line, what exactly am I looking for? I will put on an hour, but I get lost to what I'm looking for. So when I look for something, I notice I'm in January and get frustrated. Well, let's shift our energy first and foremost. That's why we start with affirmations. If you operate from a confusion, a frustration, or any of that, then you're not going to see it clearly. You know, so you all know, because if you're on the morning calls with me, you guys know I have a child in the first grade and she's doing distance education. And so when you think about that, think about, for all of you all who have children or have dealt with children, when they push back, I don't understand, I don't get it, and you're looking at it and you're trying to have a conversation with them, and you're like, look, just calm down, and you get to the point where now both of you all are frustrated. You know, it's like, look, did you look at this, take a look at this, right? And so they're not absorbing or receiving that information because there's a barrier that's placed because they're frustrated. There's a barrier that's placed there because they don't get it. And so when you relax, and I mean, just real life example, you know, my daughter gets straight. I mean, like, I'm just blessed with this one. You know, she gets straight A's on everything without effort. But there is one thing she needs to work on because they're doing things in the first grade that we didn't do till maybe the fifth grade type of thing. But there is one thing that she has to work on, and that's her writing skills. Comprehension, spelling, vocabulary, all of that is math, all of that is out of the water. But in order to write a paragraph, you know, yes, they're writing paragraphs in the first grade. In order to write a paragraph, and this is like 2 pages, so it's almost like a mini paper. But in order to write that, she has to concentrate. And what happens is we'll spend 30 minutes to an hour where I don't understand, I don't get it. And she'll just sit there and stare at the paper. She's mad, she's frustrated. But when I found a way to get her to relax, I found a way to get her to look at it differently. I found a way to get her to talk me through it. You know, she finally did one without all that pushback. It's taken a whole year. But as soon as she relaxed her shoulders, as soon as she did it, she went from being frustrated, barely passing that, to she got a 90 on the one that she just did by herself. I didn't even read it. I just saw it was, you know, what it was supposed to be. I didn't even check it. I didn't read it. I just turned it in. She got a 90 on it. And I say that because that's where we have to, and I'm using that real life example because that's how we have to operate on the charts. This is how we have to operate in real life. This is how we have to operate. You know, when we look at this, we cannot have any frustration. We cannot have any resentment. We cannot have any of that when we look at these charts. We have to look at these charts with ready to absorb it. Because if you push back because it's different, it's gonna push back at you. If you push back because of resentment, it's, you know, frustration, or because it's different, the market's going to push back at you. The harder you push, the harder it's gonna push. So if you relax your shoulders and do that, you'll be in that 92 percentile as well. You'll be in that 90 percentile as well. So that's where we have to operate from. So there is no confusion. Now, there is no frustration. Now, so now, when we come up here to the hour, okay? When we come up here to the hour, when we come up, now, when you look at your support and resistance lines, understand what I'm doing and understand where I am is understanding the market, okay? Let me show you something when you ask about support and resistance, okay? Because everybody always asks, where do I start? What time frame? This and this and that, right? Everybody. Now, this is GBP USD, and this is the monthly, okay? So you can see GBP USD since its incorporation. Like, well, not really incorporation, but since it hit the charts, which was in 93. So this has been on this particular chart since 1993. And when you look at it, you have some support and resistance lines. what you're looking for is these support and resistance lines is where transactions take place. Okay, this is where transactions take place. So when you look at it, I can see my major support and resistance lines. Okay, look at this. So this is why the ones on the higher time frames are more significant. When you look at that, see, I just dropped them on there. You can see they're very significant. This is where the market is. And so when we talked about GBP USD earlier today on the charts, right, on the call, you can see GBP USD is here. It's at a very significant resistance line. Support resistance is the exact same line. It's just what direction I'm approaching it from. So I'm approaching it from, I'm approaching it in a buy, it's a resistance. Approaching it in a sell, it's a support. It's just all about, so you always hear me just say support and resistance so I can just have complete clarity with everybody. I don't even try to separate them for you, but you do still need to know what they are. Right? Remember, I just said it, no matter what you call it, as long as you know what it is. So when you're building that relationship. So now as I'm here and I'm looking at it, so no, I don't have pivots on here. So when I don't have them on here right now. I'm talking about support and resistance. It's intentional. So as I'm looking at this, and when I see this, this is where the market is. This is the big picture of the market. So what you're looking for is those points where you know the market is going to pause. The market is going to stop. That's a significant point in the market. You notice how this kind of bounced around in this area for a long time, pulled back up to here. This was in 14, and pull back down to here. Haha, I see you, Miss Brownlee. And pull back down to here where we are. And you notice, right? This created a support and resistance because it had never been this low before. And this was in 17. It had never been this low before. But you notice when it turned around, when it came back, it happened in the same place. So the support and resistance, no matter where the market goes, you see where it started, when it began to form it, when it came back, this is still a significant level. It's still a significant level. So what you're looking for with support and resistance is significant levels. When I come back down to my daily, look at how important they are, okay? Look at how important they are. And so now you're starting to see other support and resistance lines inside of those. So now I have more. These are still significant levels because each candle right now is actually 1 day. Then when I come down to my 4 hour, you're going to see even more. Okay, so now I have more levels on the inside of here. So each time I drop down, I'm going to see more activity because one candle here was actually an entire month. One candle here was each day. So depending on how many days are in a month, whether it's 28 this month or 31, it'll be 30, 28 to 31 candles within a month. 4 hour, how many 4 hour candles are in a day? How many 1 hour candles are in 4 hours, right? How many 30 minutes are in an hour? So each candle, so every time we drop down, we see more activity, more activity. And so you notice that these support and resistance lines, like if I was to drop this one right here, those support and resistance lines, see, it rejected right there. It causes, that's why I said, imagine it's a stop sign. It stopped right here, stop right here, stop right here. Just imagine there's a stop sign. That's all you want to do is just imagine it's a stop sign. All right. And to kind of go back, I did see the question. To kind of go back for the stochastic, why is it different on each time frame? Because the candles are different. The momentum is going to be different. So you notice that if I'm here on a 4 hour, okay, if I'm here on a 4 hour, then this is going straight up. So let me show you. And I'm gonna end here tonight. So like I'm gonna put this line there and I'm gonna put this line there and this little momentum up. So we notice that in here, this is my 4 hour, my stochastic starts here and my stochastic moves up. When I come down to my hour, look what happened. It started down here and look, I have some correction, started riding sideways. When I come to my 30, look at how much more activity we have in there, okay? It almost came back down. Now on the 15, I can guarantee you we came back down. So on the 15, look at how many times the momentum went because each candle is 15 minutes. And that's what the difference is. So, but from here to here was one blue line cross over the red, and then upward momentum on a 4 hour. So to go back to answer that other question, right, because they all tie together, is, because sometimes we'll be trading on a higher time frame and you come back down to the lower time frame, and it's like, well, wait, how can you take the trade? Like, you guys will ask me, how can I take the trade when it's right here? Well, easy. I can take the trade when it's right here because I understand what's going on a higher time frame, and this is not my time frame of analysis. I understand that my trade started down here, and I'm waiting for a correction to get in. But that comes with the advancement of your trading. That comes with the advancement of the charts. That comes with the advancement of your skill set. That's what that comes with the advancement of. And so we have about 2 minutes left. So really quickly, drop it in the chat. Any questions, comments, or testimonies? I got it. Indeed. Thank you. Wow, that was a very clear view looking that way. You're welcome. You're welcome. Hi, Miss Brownlee. I told you you were a prophetess. I got you, Miss Brownlee. I love you, love you. So, and of course, I talk about the pivots all the time, but I intentionally didn't drop them tonight because I wanted you all to understand the strategy. I want you all to start feeling the market. And so that way, no matter what tool we use, whether we're pulling from the vibrata, strictly from the vibrata, go back and grab something from the harmonic scanner and bring it back over here, or go back and grab something from the bounce back and bring it over here, go back and grab something from, the swipe trades or the swipe coins, you bring it back over here. You want to be in control. You want to be in control of your destiny. I don't do signals, and I don't do them for a reason. Mr. Rogers doesn't do signals. We don't do them for a reason. You are to be empowered. You are the one that needs to be empowered. Because if I want to allow someone else, this is all mindset. If I want to allow someone else to be in control of my destiny and my life, that's what a signal is. That's just like your boss, because they're controlling when you can come to work, when you can't come to work. They're telling you when you can get paid, when you can't get paid. They're telling you when you could take time off, when you can't take time off. They're telling you if you could be sick or if you can't be sick, right? They're telling you those things. That's the same thing that a signal is. Somebody else is telling you when you can trade and when you can't trade. Somebody else is telling you how much money you can make and what you can't make, because they determine how much they feed you, not you. And you have to sit there and wait on them because you don't know what you don't know. You don't know how to take the trades and analyze the charts for yourself. So this is why Be Your Own Bank is about empowerment. You are empowered, so you can take these trades and you can do what you do all by yourself. So, all right, guys, definitely love you all. I will see ya in the morning, but do not go anywhere. Do not go anywhere. It is time.